Myself Sharanish D. Today I would like to explain BCom third semester corporate account corporate account chapter number 2 amalgamation of a companies under accounts in the nature of merger, journal entries. While preparing assets and liabilities of a amalgamation, we have to first know about journal entries. Let us start journal entries. Books of vendor companies. While we have to preparing first uh, journal entries, we must and should know about journal entries. Books of vendor company or closing books of the transferor company or accounting entries in the books of the transferor company. While preparing amalgamation balance sheet, first of all journal entry we have to see. Vendor company has to close up its business. It will dispose of all asset all its assets, make a payment of all liabilities, and distribute the surplus if any among its shareholders. While preparing for closing books of vendor's company, the following accounts are opened in its books. First one, realization account. Second one, purchasing company or transferee company account. Shareholders account, cash account, equity shareholders account, and preference shareholders, debenture holders account. For preparing the above accounts, various journals are to be passed. Closing journal entries of a transferor company. First one, journal entry. For transfer of assets, journal entry we made realization account data to each asset account. All we have to take all book value of the assets. Narration. Being transfer those assets taken over to realization account at book values except cash and bank balance. You have to make it note cash and bank balance will not be transferred. Next, second one, journal entry for fictitious asset, equity shareholders account debtor to preliminary expenses account to discount on issue of shares and debentures account credit. Next, to commission or expenses on issue of shares and debenture account credit. To profit and loss account debit balance. To underwriting commission. Being narration, being transfer of fictitious asset to equity shareholders account but not realization account. Third one, for transfer of liabilities, each liability account at book value, debtor to realization account. Being transfer of those liabilities taken over to realization at book value. Note, items representing shareholders funds do not constitute liabilities and are not transferred to realization account. Fourth one, general entry. For accumulated profit and reserves, general reserve account debtor, profit prior to incorporation account debtor, profit and loss account credit, profit and loss account credit balance debtor, and accident compensation fund account debtor, dividend equalization reserve debtor, security premiums account debtor, sinking fund account debtor, capital reserve account debtor, to equity shareholder account. Narration: being accumulated profit and reserve transferred to equity shareholders account. If it has not been taken over by the purchasing company because it is already a realized amount. Example, that one. First one, fictitious assets are not transferred to realization account. Cash and bank balance transferred to cash account. Fifth one, for purchase consideration due, purchasing company account debtor to realization account, being purchase price due. Next, sixth one, for receipt of purchase consideration from the transferee company or purchasing company, bank account debtor, debenture in purchasing company account debtor, shares in purchasing company account debtor to purchasing company, being purchase received in the form of shares, debenture and cash. Next, seventh one, for transfer of equity share capital account debtor to equity shareholders account, being transfer of equity share capital. Eighth one, for payment of liabilities by vendors company not taken over by the purchasing company, liabilities account debtor to cash or bank account, to shares in purchasing company account credit, being liabilities not taken over by purchasing company will be paid by the vendors company. Note, profit or loss on payment of such liability will be transferred to realization account. If profit, liabilities account debtor to realization account, being a profit, if less payment is made, credited to realization account. If loss, realization account debtor to liabilities, being a loss, excess payment is made, being loss, debited to realization account. Next, ninth one, for assets sold by the transferor company not taken over by the transferee company, bank account debtor to assets account, being sale of assets not taken or the purchasing company. Note, profit or loss on sale of assets transfer to realization account. Under this, if profit, assets account debtor to realization account, being profit on sale of asset transfer to realization account. If loss, realization account debtor to assets account, being loss on sale of assets debited to realization account. 10th one, for liquidation expenses, if the liquidation expenses are to be met by the transferor company, realization account debtor to bank or cash account, being realization expenses paid by the vendors company. B, if expenses are to be borne by the transferee company, note, no entry is to be passed in the books of transferor company. C, if expenses to be borne by transferee company are now paid by transferor company, then reimburse. First one, on payment of liquidation expenses, transferor company account debtor to bank account. On second one, on reimbursement from purchasing company, bank account debtor to transferee or purchasing company account credit. Note, it means that the amount is first paid by the transferor company and then it is reimbursed by transferee company. D, if liquidation expenses are included in the purchase consideration and not paid separately by the purchasing company, so realization account debtor to bank account, being expenses paid. Next, for closing stock of realization account, first one, if profit on realization account Realization account debtor to equity shareholders account, being realization profit transfer to equity shareholders account. Next, second one, B, if loss on realization, equity shareholders account debtor to realization account, being loss on realization transfer to equity shareholders account. 13th, for transferring of preference share capital account debtor to preference shareholders account. Next, 13, for arrears of dividend, realization account debtor to preference shareholders account, being arrears of dividend. 14th, for less payment to preference shareholders account debtor to realization account, being payment to preference shareholders. 15th, for final settlement equity shareholders account debtor to shares account credit to debenture account credit to bank account. Next, 16th, for payment made to preference shareholders account debtor to preference shares in purchasing company to debentures in transferring company. These are all above closing entries of the vendor's company. Now let us start incorporating entries in the books of transferee company or accounting entries in the books of transferee company. Accounting in the books of purchasing company is to be maintained as per accounting standard 14th. As per accounting standard 14th, there are two methods of accounting for amalgamation in the books of transferee company. First one, the pooling interest method. Second one, the purchase method. The first one, the pooling interest method, or in the nature of mergers. The pooling, first one A, the pooling of interest method. This method is applicable in case of amalgamation in the nature of merger. In this case, the amalgamation is accounted for as if separate business of amalgamated companies were intended to be carried on by the purchasing company. That's why only minimum changes are made in aggregating the individual financial statement of a transferor company or vendor companies. As per accounting standard 14th, the following factors are to be taken into consideration while making entries in the books of transferee company. First one, the assets, liabilities and reserves of the transferor company are recorded by the transferee company at their existing carrying amounts, book values of vendor companies. The balance of profit and loss account of a transferor company should be aggregated with the corresponding balance of the transferee company or transferor to the general reserve, if indicates simple merging together. Second one, the difference between the company consideration and paid up amount of share capital of the transferor company is adjusted in the reserves and surplus of a transferee company. Third one, the transferee and transferor companies should adopt uniform accounting policies. Next, incorporating journal entries. The following journal entries are to be passed in the books of transferee company for incorporating the financial statements of the transferor company. First one entry on the amalgamation of business. If for adjustment of purchase consideration, if the entry is business purchase account debtor to liquidator of transferor company, being narration being purchase consideration due. Second one, for recording assets and liabilities and reserves taken over from transferor company, for incorporation assets and liabilities and reserves, sundry assets account at book value account debtor to sundry liabilities at book value to profit and loss account at book balance to reserves at book balance to business purchases account purchase consideration being incorporation of assets and liabilities taken over. Note the difference between debit and credit is adjusted in the reserves of a transferee company. Third one, for making payment purchase consideration, liquidator of a transferor company account to share capital account to security premium account credit and to bank or cash account credit being payment of purchase consideration. Fourth one, for payment of liquidation expenses of transferor company, profit and loss account debit to balance or bank or cash account credit being liquidation expenses paid by the transferor company. Fifth one, for the formation expenses of the transferee company, if ye own preliminary expenses paid by the transferee company, preliminary expenses account debtor to cash or bank account. Cash or bank account. So these are all above entries. These are all above entries. Books of vendors companies, closing books of the vendors company, transferee and opening opening entries of the transferee company, and closing books of the transferor companies. While we have to close the books of accounts, we have to make a transferor company closing books entries, and while you have to incorporation of a transferee company, so you have to make journal entries of transferee companies. So this is the journal entries of in the nature of merger. Thank you.